Welcome back to 10 Top Tips. Let's run you through the balance tips that we had.
Okay, all right. Let me get ANU Jain into the discussion as well, Senior Vice President, IIFL Private Wealth Management. Anu, good morning. Good to have you with us here on the show. Prashant here. Your initial starting thoughts, Anu. Where do you stand in the market? Index?
Well, I agree with him. I agree that there's a high chance of a mild correction coming in because the fact is you've run up substantially from the last 4 to 5 days. The way market closed yesterday was showing essentially some first signs of tiredness at 6,200. So at those levels, one would have to be cautious. I'm not saying that you have to close all your longs and go short, but at the same time, caution is advised. So whether you want to take a hedge position as he's advising that you go long on a stock and you go short on Nifty, whether you book partial profits and then hold on with a stop loss, it's, I think, very individually driven and depends on what you're holding, but definitely closer to 6,200, 6,230 odd is going to be a resistance zone. And given the fact that the volumes are still low, I think one needs to kind of watch how these levels pan out over the next couple of days.
Morning, Anu. Manvi also joining in from the Delhi studio. So 6,200 is a resistance zone, and you said there is a probability, high probability of a mild correction. So where does that place the bottom in the immediate term?
Pardon, couldn't get the last part of it.
You know, what's the bottom band in the immediate term? I mean, where do you see the range settling on the lower side?
See, essentially now supports would be more closer to 6060, 6090 kind of levels. So that's if you see from 6,200 odd levels on the future to 6060, that works out to almost 2.5%. It would test those levels. If those hold out, it could be another consolidation phase. I mean, one has to watch the levels as and when they cross. But as of now, I would say immediate supports are between that level.
Okay, so, you know, let's for a moment focus on the performers, Anu, that come to mind for the next few weeks. What do you have your attention on? What do you think is going to move on the higher side?
See, we've been bullish technically on metals for now about a month and a half. They have moved up very smartly. I remember when we were talking last time, we were discussing Hindalco, Tisco, which have done quite a bit. At the same time, if you look on the charts, they are overbought as the Nifty is overbought. So I would wait for a dip to get into IT and metals, which are looking to be strong at the moment. At the same time, mid-cap oil stocks like MRPL, Petronet are looking good even at these levels. Petronet has been consolidating, can give a further move up. So there would be sectors which look good even at current levels. So I agree that you could probably go long on certain stocks and probably look at, you know, hedging it against the Nifty. But for stocks in the metal pack as well as probably in the IT pack, a small dip would be when I would look to buy them in.
Anu, so, you know, if the market, the index takes out 6,200, you know, easily supported by banks, etc., which were the strongest pack in terms of, you know, performance in 2010. So you'd like to see strength there. If that happens, would you say, you know, taking out the previous high isn't, you know, wouldn't be all that too difficult because, you know, you're 2% away from a new high, you're 2% away from that 6,000 odd mark as well. Could go any ways, could go either ways. You know, sure, the market's run up in the last 4-5 days, but doesn't stop it from, you know, sort of adding on a bit more. And then probably coming back a little bit. So a new high could happen before, you know, a correction happens. Is that a possibility?
I mean, obviously this market is right now in a short covering mode. It can happen. But if I were to play probabilities, I would probably give that a lower chance and probably a correction happening because the last time around, just psychologically speaking, a lot of people have been stuck at those levels. Mid-caps haven't recovered. So until and unless really market sustains at 63.50 kind of levels for a couple of days, there would be more selling emerging at those levels rather than, you know, fresh buying kind of emerging. And plus you're just right into earnings season, so then it would be very driven by what the earnings come in for that next week. So there is a high degree of possibility that people would rather book profits than get fresh longs built into that position. So just by that sheer simple logic, I would say that probably there is a chance that, you know, it could probably take a lot longer to kind of cross that level, consolidate. Maybe if there is strength in the market, I mean, I would really read it as strength if it can sustain 6250 for, you say, a week, 10 days post the market, results start pouring in. So you have to really watch this period. That's why I'm not extremely bullish or bearish, but cautious, because this whole 10-15 days can kind of pan out difficult and volatile for the market, and one would have to play it by the ear.
Okay. Anyway, we're talking about 100 and 150 odd points, either which ways. Banks, Anu, just come in on that. Where do you stand? State Bank of the larger ones, SBI, ICICI Bank, Bank of Baroda, etc.
Well, if you go to look at the PSU banks, there is still not that much of a recovery that is, kind of looking into it. So if you look at a State Bank of India, yes, it's kind of recovered from where it's been. It can possibly go up a little more to closer to those, I would say probably there's a possibility of going towards those 2900 kind of levels. It's close at 28, 22. From the way it's fell, it's nowhere come close to recovery. So it's been, in the whole 1 week, it's recovered 2.5%, whereas it's lost 9% in the last 1 month. So can't say that there is a lot of momentum building up there. But yes, closer to 28.80, which is about 3% from here, there is resistance. So it can move up to those levels. So about a 2-3% move up in the bank. But at those levels, probably you will see pressure again coming. Then it would be result driven. So I would probably look at banking with a point that there is a 2-3% more move left into it. On the private banking, however, there is some more traction. So if I look at an HDFC Bank formation which happened yesterday, I'm a little more hopeful on that. So it's closed at about 23.05. And I think there is a possibility that if you look at the 1 month, 2 month, 3 month high, then that's pretty much close by. So the high lows have been closer to 2400. So it can scale back to the 24-25 levels. So that shows innate strength into the chart. I would probably play that over a State Bank of India. So I would think that there is definitely a 2-3%, but I think private banks would have it better than PSU banks for the time being.
So there's some difference of opinion between Sanjeev and Anu there. Let me see if Jitendra Panda's got his eye on anything in the banking space and whether it weaves into either of our panel's views. Jitendra, how are you playing, say for instance, the PSU heavyweights like State Bank of India? What would your call there be?
Yeah, well, in the derivatives segment, if you observe, yeah, certainly some positions were built up on the trading side. SBI is looking that there could be some upside. But having said that, let me also say, I don't see much traction there as yet because a lot of short positions were rolled over in the banking sector and they continue to hold on. So I believe, they are waiting for the resistance level 2,800, 2,900 level to cross. So I believe 2,900 is a very far away thing and these short positions will hold on. Having said that, let me say, compared to the PSU bank, private sector banks looks much better, and we have seen yesterday also in Axis Bank traction building up, as well as in HDFC Bank. So Axis Bank also we saw moving above the 200-day moving average technically, and a lot of long positions getting built up on fresh long position getting built up on that script. So comparatively, when you're asking the question, PSU banks, yes, we should wait for some more movement to happen before we take anything. But if you are looking at banking sector, if really we want to trade in, then private sector bank is the where we can look at. Maybe HDFC Bank or an Axis Bank looks attractive there, where we have seen some long position, fresh long position getting built up there.
Reliance Industries at 1054, Sanjeev. It figures on your picks list. Stocks done nothing in 2010. So, what would...
See, Manvi, as per the charts, we think that has made a higher bottom, and Reliance or the banks are the ones which can propel the last 100 points. IT is exhausted. You can have FMCG, put in, autos are underperforming. And, on fundamental counts also, Reliance at 1,050, I'm waiting for it to cross and close over 1075. So you could see Reliance at least touch 1125 in, the next 10-15 days if you're going to take out 6,300 easily.
Interesting. And that would extend to other counters in the oil and gas market?
Yes, we are bullish on ONGC, GAIL and Reliance, in that order, all three of them.
Okay. Anu, do you want to throw in your view on Reliance Industries in particular? The 2010 scorecard, we all know. Is 2011 going to look any different for that counter, technically speaking?
Well, I agree with Sanjeev when he's saying that, essentially it's a near resistance at that 1077 levels, and if it does cross that, then 1124 is what you're looking at. However, yesterday there was some profit taking, so I think the oil and gas sector, yes, I do agree that is the strongest, that kind of led the rally. But I would just differ a little bit on the stocks, so probably each one of us has their own picks. I like Petronet better. It's been consolidating for quite some time. It's been into this zone where it's come to this level and not kind of moved ahead. So at 125, I'd probably say that in a day or so, I'm looking more at Petronet kind of breaking out towards 132, 133, where it's got the final resistance and then it goes into a new zone. Or for that matter, something which is high beta like MRPL, which has been consolidating at these levels. So MRPL, I think if it can hold on to, those levels of 73, then probably you're looking at 78, 79, which in percentage terms is higher to play than probably, for that matter, Reliance. I'm not in any way bearish on the stock, but at the same time, if I had to take a relative choice between stocks, then probably that would be what I would play into.
Okay, just a quick thought on sugar stocks. I don't know if you've looked at the sugar contract on London, the chart there. Somebody sent a chart, very interesting chart yesterday, and said that it looks extremely toppish. I don't know if you've had a chance to look at it.
I haven't looked at that, but sugar as such, the whole charts of individual stocks is looking a little overbought. I am in no way saying anything else, but it's like probably in for some consolidation, whether it could be just sideways or it could be mildly down. So, I mean, I looked at charts of Balrampur, Dhampur, I think looking saturated in the sense that probably needs some time to be at these levels. I'm no way saying that it's looking toppish, but I would probably now book partial profits for sure. Renuka also, once it shot up from those levels of 86, 87 to about closer to 99 odd levels, there was some profit booking and it's going through consolidation. How it handles the consolidation is what one needs to watch out. But keeping making a fresh opening of a buy at this level would be a little difficult, so I would watch it out. Probably on a correction till 94, 95, I would probably get back into the stock. Even for that matter, related stock, Praj is looking very overbought. So just on the fact then when market is kind of looking slightly toppish, one wouldn't enter into overbought stocks. Rather one would wait, book profits and then enter if they give a fresh breakout. So just by that logic.
Anu, Sanjeev, Jitendra will be back with you after this quick break. Got a few minutes to go for the pre-open session, but meanwhile...
Welcome back. SGX 6206, 26 odd point, gain 0.5% odd gain on the SGX. We've got about 4.5 odd minutes to the pre-open session. At 9:08 around is when we get indicative opening prices. And 9:15 the normal market segment kicks off. Watch out for metals. That was one big pack of stocks which looked very good. Bajaj Auto, the only noticeable large loser in trade yesterday. Anu, come in on Bajaj Auto. How does that one look now?
Well, Bajaj Auto is definitely, there was pronounced weakness coming into it yesterday. However, it's kind of closer to those levels that one would want to kind of start cherry picking them. Just watching that for a day or so, I think probably would look at another 1 or 2% and then probably start cherry picking into the counter. As of now, I think would watch it out because there has been selling pressure on it. Yesterday was news driven because of the fact that the sales numbers came in. And in terms of levels, if I was to really look into it, I'll just be giving that to you in a second. My chart's just opening up. So essentially, I would say that probably at the current level, if I'm holding the stock, I would continue to hold it with a stop loss closer to 1435. But if I have to really start buying it, then would that look, closer to those levels of 1430, can start picking it up. Because if it breaks that 1480 levels below which it's kind of closed yesterday, then can slip down to 1430. But those would be good levels to start picking up the stock for a long term.
Same question with Hero Honda. It's done a respectable job of sort of coming back to closer to 2,000 odd rupee levels.
Yeah, that stock I'm bullish on. I mean, I would look at dips to pick that in. Yesterday there was a mild kind of a dip which started coming in. I think it can probably dip to about 1935, 1936 levels. At that level, I think it is looking good to buy. The chart pattern is like the way it's come back from, kind of the abyss it fell from. It looks quite bullish. So if it can hold on to those levels of about 1930, 1935, then I think it's going to make a fresh assault at those 2040 levels. Essentially, the best part would be to play either when it breaks 2040 or when it dips down to about 1935 odd levels. I think for an investment perspective, 10 to 15% over the next 3 to 4 months is possible. So I would probably buy it for a swing trade of about 2 to 3 months if one has the patience for it.
M&M, Jitendra, you see some upside there. How much?
Yes, I expect some upside in this series, and certainly I expect at least 5% up move from here. So I believe M&M can be bought in this series, January series, because I believe results also should be good, and since the rally will begin after mid-half for the budget also. So I believe Mahindra is a good pick in the auto sector.
Positive on Sri Renuka also? Jitendra?
In the sugar sector, yes, I believe if once 100 is crossed, we can see 105, 100 reaching very soon. So Renuka has given a good rally in the November and December series, but I believe the run could continue with international also market showing some robust developments there. So I believe we have to look for 100 crossing 100, but which is very close by, and I would like to hold on the long position which we have been holding on for the last two series. Okay. And take a look out for target 105.
Sanjeev, you haven't got any mid-caps on your radar?
Well, mid-caps, some of our old picks have played out very well. Primer among them was Arvind at 35. Now it's closer to 75. We still hold, you could see 3 digits over there. And another is Alok. So, those are the type of textile stocks, plus the Nahar group, Nahar Spinning, Nahar. We've always held, those are very undervalued stocks as far as book value, price to earning, or any other parameter. Only thing is the gestation period could be longer.
Okay, so 40 seconds now to the pre-open session. Sanjeev, quick comment on Hero Honda, because of all that is happening with the investigation, this fraud which has happened. Any collateral damage that you see for?
See, Prashant, we don't know what type. It's the Hero Group, whether it's in the Sunil Munjal have denied having any link. And anyway, 20 crore to 30 crore is the...
That's what they claim.
Yeah, exactly.
Agencies are saying it's about 200 crores plus.
See, I don't know. Let the whole stuff come out. You'll know more about that. Firstly, we don't know if Hero Honda is directly involved or not. So, right. That could be a slight dampener in the medium term, but we'll have to take it once we get the news on that.
Okay. All right, Sanjeev. Great having you with us here on the show. Thanks very much for dropping by into our studios. Anu, great having you with us on the show. Thanks very much for coming in. Jitendra, as always, pleasure having you with us here as well. You got the pre-open rates now.
Soon again. We're going to take a break. When we return...